I believe that the jobs number have helped to support a little bit of the market optimism, because even with a lot of the concerns coming in from the COVID-19 cases that's been steadily rising over the past few weeks, we've still seen stock markets in the US looking still quite buoyant and supported. And I think that's a big factor in terms of having improving economic data to cushion a bit of the market risk aversion.
What is your outlook then for the dollar going forward as we move into the back end of 2020 and see this recovery?
Well, expect a volatile dollar outlook ahead. For now, we see that the dollar is looking pretty stretched, so it's experiencing some consolidation. Over the next month or so, we could start to see a bit of a dollar strength as I think conditions turn more risk averse, and I think markets may start to turn their attention towards the higher COVID-19 infections in the days to come. However, I think trend-wise, as the situation gradually improves and as the world learns how to live with COVID-19, I believe that the US dollar will eventually still be driven by the fact that the US Fed has been the one that's been expanding the largest in terms of its balance sheet, and then the dollar will start to weaken by the end of the year.
What does the economic recovery look like, do you think? Is it this V-shaped recovery? We had, of course, the strong US jobs numbers. We got some positive data out of China today when it came to services PMI.
Certainly, the situation remains pretty fluid. I would rule out a bit of a direct V-shaped kind of recovery, because if you look at, for instance, indicators like retail sales, the recovery phase is a bit more gradual compared to the downturn and the trough in April, and we could see a little bit of inverted V if we don't assume if you assume that since the second wave doesn't hit hard. If it hit hard, we could even be looking at W kind of recovery due to the fact that there could be some more enclosures and downs in localized areas, but may not be as widespread as what we have seen in April.
You have a preference for the euro going forward. Why is that?
Well, we look at fundamentals the next 12 months, and also we look at the policy adjustments over the past few months. And I think we believe that a synchronized fiscal policy along with the monetary ease is supportive of the euro. And I think if you look at the relative differentials between the COVID-19 outbreak in the US as well as in Europe, we do see some recovery in Europe in the months ahead compared to that of the US. So I think better fundamentals alongside a more gradual recovery and a more stable recovery in the Eurozone compared to the US, that may be a bit supportive of the euro, at least in the months ahead.